Hey everyone, welcome back to the channel. Today we're diving into USDA loans. What are they? How do they work? Who are they really for? If you've been looking for a mortgage that requires little to no down payment and offers competitive rates, you'll want to stick around. Let's jump in. Let's start with the basics. What the heck is a USDA loan? A USDA loan is mortgage backed by the U.S. Department of Agriculture. No, you don't have to be a farmer to get this. In fact, most people that qualify for USDA aren't farmers at all. The goal of the program is to help rural or suburban areas become homeowners with as little to no financial burden as possible. Unlike conventional loans, which are typically issued by private lenders, USDA loans are government backed. The idea is to encourage development in less populated areas and offering home buyers a loan option with low interest rates and no down payment required. So, if you're looking to buy a home in an eligible rural or suburban area, this might be a great option for you. Now, let's take a deeper dive into features of USDA loans. What makes them stand out from other loans? First off, let's talk about down payments. One of the biggest advantages of USDA loans is no down payment required. That's right. With a USDA loan, you don't have to put any money up front. For many first-time homebuyers, those are limited savings. This can be a game changer. Now, you might be wondering why no down payment? Well, USDA wants to encourage people to buy in homes in rural and suburban areas, so they designed this program to be accessible as possible. By offering no money down mortgage, they make homeownership possible for people that may have had cash constraints or didn't have the traditional 20% down. Next, let's talk about credit score requirements. USDA loans actually are quite forgiving when it comes to credit. While most conventional loans require a credit score of 620, USDA loans require a score of 640 or higher for an automatic approval. This makes USDA loans a great option for people that have less than perfect credit, but are still financially stable enough to manage monthly mortgage payments. Another important feature of USDA loans is low mortgage insurance fees. With USDA loans, you'll still have to pay mortgage insurance, but the rates will be much lower than those with other low down payment options, like FHA loans. This can result in lower monthly payments, making it more affordable in the long run. So, who qualifies for a USDA loan? Can I get one? While the eligibility requirements seem to be very specific, they're not as restrictive as you may think. First thing is location. The home has to be located in a USDA approved rural suburban area. This isn't just for farmers or agricultural properties. It's meant for areas less densely populated, still having access to necessary amenities like school, hospitals, shopping centers, you can go to Publix. The USDA actually has a map where you can check and see if that home qualifies in this area. Income limits. USDA loans are designed for low to moderate income borrowers. While the income limits vary depending on the location of the property, they're set for about 115% of the median area income. So if you're earning more than the median for your area, you may not qualify for the program. But if you're below that threshold, this could be a great option. Credit and debt. While the USDA only requires a minimum of 640 for an automatic approval, your overall financial health may be taken into account. Lenders will look at your income, your credit history, your debt to income ratio, and make sure you can afford the monthly payments. Now let's talk about the benefit of USDA loans. Trust me, there are quite a few. One, no down payment. As I mentioned earlier, the biggest perks of USDA loan is you don't have to come up with money out of pocket. That's right, zero. This makes it fantastic for buyers who are struggling with saving the money and not having the assets, compared to doing a conventional loan. Number two, interest rates. USDA loans, because they're backed by the government, has competitive interest rates, often lower than conventional loans. Number three, lower mortgage insurance. Mortgage insurance with USDA loans are generally more affordable than FHA and conventional loans that require PMI, which is called private mortgage insurance. That translates into lower monthly payments. Number four, more flexible credit requirements. USDA loans are more forgiving when it comes to credit history. At 640 credit score, you'll need automatic approval, which is lower than most conventional loan requirements. Of course, like any loan, USDA loans come with a few downsides that you'll need to keep in check. The property location. You may like the property in this school system. Well, with USDA loans, you really don't have a choice. It has to fit in that map. Income limits. While USDA loans are great for low to moderate incomes, they do come with income restrictions. If you make more than the median income, you won't qualify for the program, and they are very strict on that. So this could be a disadvantage for buyers who are in the middle income bracket that don't fit those income limits. Number 3, mortgage insurance. Even though mortgage insurance is lower than the other programs, it still exists. You'll have to pay an upfront mortgage insurance premium, as well as an annual fee. These costs can add up over time, so be sure to factor them in your budget. So who should consider a USDA loan? First-time home buyers. If you're buying your first home, you qualify based off income and location, this can be a fantastic option for home ownership with 0 down. Buyers in rural or suburban areas. If you're looking to buy in less densely populated areas or rural, you'll definitely have to consider a USDA loan. There are a lot of beautiful rural and suburban areas that qualify for this program. Buyers with moderate income. If your household income is below the median for the area and you can meet the other eligibility requirements, USDA loan could be your ticket to homeownership without needing a large down payment. In conclusion, USDA loans are great options if you're looking to buy rural or suburban areas with a little to no down payment. They come with low interest rates, affordable mortgage insurance, making them competitive choices for many home buyers. However, if you're planning to buy in an urban area, if you earn above the income limit, this may not be the best loan for you. If you think USDA loan could be the right fit for you, make sure to contact a lender who specializes in USDA-backed mortgages to see if you qualify, like us at 14 Days to Close. Thanks for watching today's video. If you found this helpful, be sure to like, comment, and subscribe for more home buying tips and mortgage advice. Catch you on the next one.